Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Monday, the 7th of June. Starting off with an old favourite, or at least a favourite of mine, Cornish Metals. Nice breakout through the opening range through 12 pence. Tested that as support late last month, and we've got a sort of V-shaped formation now. It looks as though the shares could head towards the top of the rising trend channel, the notional trend channel. They're up towards 22 pence, perhaps as soon as the end of next month, and at least while we hold above the 12 pence level. Ideally, we don't even go back below the 20-day line around 13.5. But be cautious on the shares. Maybe you wait for an end-of-day close through 16 pence, which was last month's intraday peak. Onto a stock which is rather less easy to, or less user-friendly, Hurricane Energy. We had the first attempt at a recovery rather last month. That took us to 2.2 pence. Current situation is we've got decent accumulation here at and above the 20-day line at 1.04 pence. But I suppose if you're cautious, which probably most will be, then you'd wait for a break of the initial June resistance, which was seen on Thursday at 1.5 pence before assuming a retest of 2.2 pence is on its way. The stop loss back below a penny and back below that 20-day line. One of the punters' favourites at the moment, which continues to be a punter's favourite despite a bit of a rug pull that we've had recently, is Codal Minerals. Here we've got good support for the shares coming in at and above the 50-day moving average since that dive we had on some fundamental news that was there last month. So the view is that while we're above at least 0.2 pence, looking for a retest of last month's resistance around 0.35 perhaps by the end of next month. Best case scenario at the moment up towards 0.43 pence, which is that resistance line there from back in at the end of January. But looking bullish at least while we're above the 50-day line, which is currently just below 0.2 pence. So let's see how that pans out. Stock which has had a bit of a slow start in its lifetime here on the London market is Mast Energy. We've just had that little dip below the 12 pence initial support for the shares. Taken 2 or 3 days to flip back above it, which is a good sign. Normally 2 or 3 days as a bear trap is actually a bullish signal rather than a bearish one. Want to see an end of day close through that April resistance line at 13 pence to open up the prospect of a move to the top of the broadening triangle from April at 18 pence plus. That may be on its way by the end of next month, although we might have to wait a bit longer given the way that shares seem to be taking up the slack still on this situation. Stock which I covered quite a few times, largely because of the coverage in the Sunday roast, was Net and is Net Scientific. Here we had, I suppose, an entry point on an end-of-day close above the 70 pence level, which was basically the intraday peaks that we had earlier in the year. So that was that entry point there, notional, on the 28th of May. Nice gap up here towards, the initial target here was 90 pence, and then the best case scenario target up to 110 pence. We've cleared both of those with a gap through the resistance, which is normally what you see in the most bullish of situations. That allows us to say that while we're above £1.10 on an end-of-day close basis, we've now got a best case scenario target, perhaps as soon as the end of next month, up towards £1.60. And obviously that would be quite a result for people who got into the stock near 70p in recent days or the last couple of weeks. Stock which has been slightly more frustrating is OILX, but seems to be gathering a little bit of momentum now. We had the bear trap below the initial May support around 0.24, went down to, 0.2 pence, but bounced back and an end-of-day close above the rising 50-day line and that line of resistance from April at 0.27 pence should be enough to take the shares on their way for at least a retest of April resistance at 0.5 pence plus. And the best case scenario target at the moment, maybe by the end of next month, up to 0.6 pence at the top of that rising trend channel from back in January. Stop loss still around the, or just below the 0.2 pence level for OILX. Stock which I haven't covered here for quite a while. I can't actually remember how long ago it was, but we've got Pressure Technologies here. Nice little trend line break there. That's from the beginning of the year, and that was around 90 pence. So an end-of-day close above 90 pence and above the 50-day line just below. It should take the shares onto a retest of the £1.10, £1.20 area. That could happen in the next couple of weeks. Best case scenario target here now for the end of next month up to £1.30. And the upside valid while we hold above the floor of the channel and the 200-day line at 83 pence. So looking fairly well set for that. Was suggesting that with Scancell Energy, the unfilled gap to the upside that we had, back in February through 30 pence was a solid buy signal, or technical buy signal. We've had another one now to start June through 40 pence, and the longer the shares remain above 40, the greater the chance of a move towards 50 by the end of this month. If you're ambitious regarding the stock, maybe 57 pence at that November resistance line projection could be on the cards by the end of next month, but looking quite decent in terms of the aftermath of that unfilled gap to the upside on Scancell. Stock which is maybe just starting its bullish journey now is Scancell Holdings. Just been trying to take out the last of the weak hands, I think below 20 pence, which it did for 2 to 3 days last week. As I said, 2 to 3 days below support level and then a flip higher tends to actually to be a bull signal rather than a bearish one. Bit of bullish divergence there in the RSI window as well, so a lower low there for the start of June, but a higher RSI trace, so that suggests that there is momentum. Plus, we've had multiple support points for the shares above the 200-day line, basically since the gap higher through resistance, and that was a starting gun on the move last August. End of day close or a weekly close above the 50-day line, and that February resistance line at 21 3/4 should take the shares up to 35 pence as soon as the end of next month. Just 3 stocks to go now, and a new face to look at. Today is Symphony. Here we've had, I suppose, the higher low really for May was the big buy signal, or big positive signal there, but we had a bear trap gap reversal at the end of March, and really if you were eagle-eyed, 15-16 pence or 16-17 pence would have been the entry point there for initial move to 25. Currently above 15, we're looking for 25 again. Best case scenario target up towards that November resistance line projection at 34 pence by the end of next month. If you're cautious on the stock, maybe wait for an end of day or a weekly close above the 200-day line at just under 21 pence before considering this stock on its way. Bit of a lap of honour for Tomco in terms of the charting position here. We had that gap close, bear trap gap close that we had, a bit like NSCI. That was around, around the 25th, 26th of, at least the 26th of May. And filling that up to getting a notional 0.52 entry. Now we're at 0.8 and looking for the long suggested target here up towards 0.9, maybe 0.92 even, at that September resistance line projection. That could be seen by the end of this month. Upside argument valid while we hold above the initial June resistance at 0.7, so above 0.7 looking towards 0.9 plus. If you are a fan of the shares and looking for greater moves to the upside, perhaps we're pointing at 1.2 pence on a 2 to 3 month view while we remain above 0.7 pence. Another new name in the near term is XL Media. Here we've got a situation where we had that brief bear trap below. I suppose that was the initial May support at 47 pence. The longer we remain above 47 pence, the greater the chance of a move towards the top of that broadening triangle from March up towards 72 pence, and that could be seen by the end of next month. Again, if you're cautious, maybe wait for a clearance of the 50-day moving average at 54 pence before considering the shares finally on their way. But they've had multiple support points above the 200-day moving average in recent months. I suppose the starting gun there back in November with that push through October resistance at 26 pence. But that's all in the rear view mirror. 54 pence and then 72 pence is what we're hoping for on XL Media. That's it from me today. More updates tomorrow.